All right, welcome everybody. This is going to be a follow-up from my last video, which was all about trading in balanced market conditions. This video is going to be talking about how to trade the breakout of balance when you actually get the true breakout. So if you haven't watched the last video, make sure to do that before watching this one so you understand what is going on. All right. So what we were talking about last time was that in a balanced market conditions, you are going to certainly want to use the volume profile to understand where the bulk of transactions has been done and where buyers and sellers are currently comfortable doing business. That is what the volume is telling us. This is where business can be done. Both buyers and sellers are in agreement and willing to transact within the value area of a various profile that is balanced. All right. On your initial attempts to break prices out beyond to the upside of a balanced profile, you are going to be met with more initial selling because those are seen as premium prices by the sellers, and the buyers, which were comfortable doing business down here, are no longer interested in buying at those higher prices. All right, so you would look to fade the extremes back towards the mean. The same would be true to the downside, is that initial attempts to break the market out down below the value area is met with an imbalance of buyers because sellers do not want to sell at these lower prices. Where most people get tripped up in balanced markets is trying to trade the breakouts. All right. And more times than not, you are going to see false breakouts before you finally get the true breakout. There are certain conditions and certain criteria that need to be met in order for it to be a true breakout. And this just all goes into understanding auction market theory and the dynamics of volume and how to transact in the markets, how the large participants are seeing the markets. What we need to see for there to be a true breakout, either above or below balance, is first, we need to get outside of the value area. Prices need to get outside of the value area. And then we need to build value, aka basing or creating a new balanced range, followed by continuation in that same direction. All right. So that can be true to the upside. That could also happen to the downside. Prices come down. We start building value below the prior value area, and then we get that continuation down. All right. Both of these would be acceptable. These are the models for trading an initial balance range breakout. All right, because what this is telling us is that if buyers and sellers were both comfortable doing business here before, right, is that one side of the market has to accept worse prices in order for prices to move beyond that value area. All right, so what we can see if the markets go into balance outside of the prior value area, that is showing acceptance from buyers at these worse prices, and then you get the confirmation by continuation out of that new balance range. The same would be true to the downside, is that if we get the market leaving the value area to the downside, followed by some new balancing or basing, and then continuation down, that would be confirmation that we are now leaving this prior fair value range and searching for new fair value where new transactions can be done and new business can be done with the overall market. All right. This is very, very important. In order for there to be a true breakout, we have to get the building of value outside of the prior value area, followed by continuation. This would be the model for the upside, and then this would be the model for the downside. This is a very high probability setup if you take trades around this setup. And they actually manifested in the last 3 out of 4 sessions with 100% hit rate on them, all right, as well. So this is a very high probability setup. It's one of my favorite setups, but this is why most people get tricked because they don't understand the dynamics of what the market is actually telling us according to volume. Market is telling us that both buyers and sellers are in agreement here. Is that sellers initially find these to be premium prices and are happy to sell, but buyers do not want to buy at those worse prices. So what we need to see is acceptance, value being built, and continuation so that we can get a true understanding that buyers are willing to accept worse prices. And now the market is going to go search for new fair value. All right. These are the two models for a initial balance range breakout, and you should take notes on this because this is a very high probability setup and something that happens pretty often in the markets with a good success rate as well. All right. So then how do we trade these setups? All right. What you want to see if you are a price action trader is a break and retest, as simple as that. So if we build value higher and we start basing and then we get the continuation higher, you are looking for a pullback into that new demand level or that new balance range where the buyers have accepted worse prices for continuation higher. All right. That would be true to the upside, and then the same would be true to the downside. You want the markets to continue, break, retest, and collapse, all right, back into that prior new value that was being built by either the buyers or the sellers, all right? So those are the models. Those are the models. These are very, very good trades, and you can take those based on price action by looking at the new balance that's being built higher. You get the continuation, you wait for the retest of that initial balance for the move higher, all right? What I'm gonna do is show you guys here a couple examples of prior sessions here and this model in effect, okay? So I'm gonna take away some of these drawings. I'm gonna turn back on the price charts here, and then I'm also just gonna turn on the overnight sessions as well so we can understand. This was on the NASDAQ futures, and these were trades that I took every single time they happened as well, all right? So this was from Monday, all right? Monday, December 22nd. And what we can see is the initial balance from the day before. That balance continues into the overnight session, all right? And then what do we see? Once the New York session starts, we can see that value, a new balance is actually being built higher up here, right? And realistically a little bit higher as well, depending on what time frame you're using. But we can certainly see that there is some basing here, all right? And the market is going sideways, building value, and then we get continuation, and then we get the retest. Now, you shouldn't have taken that trade like that. You should have taken the trade like this at that one right there. And the retest provided a beautiful opportunity to take that trade all the way until the close if you didn't want to hold it overnight, all right? So there's the break and retest on that session. I'm going to show you a break and retest on the session from last Friday as well. All right, so here we go. We have another one of those balanced profiles, much more whippy. We had a news event that day, but we can clearly see the value area high and the value area low where most of the business has been done. And then coming into the Friday session, what do we notice? We notice that outside of the value area, we have new value being built, some basing, some balance, followed by continuation. We get the retest, and then that would have been an amazing trade up until the end of the day, or if you wanted to hold it over the weekend, I mean, that was an amazing trade as well, all right? And then we come into the session today, all right? And the initial session started off in relative balance, all right? And we can take a look here if we zoom in, all right, is that the initial attempts to break the market out to the downside were bought up by the buyers. The initial attempts to break the market out to the upside were sold by the sellers, and we come back down into the value area. And then what we can see here is that value is being built outside, and then you get the continuation. Unfortunately, if you're a price action trader, the retest never came back down towards that new value area, that new basing structure that was built outside of the prior value area. So taking a retest, if you're a price action trader, is really what you would need to wait for, but you never got it and you missed out on a really good opportunity. If you're going to take more opportunities, then you need to use tools like order flow in order to trade the breakout, because sometimes you don't always get the retest. And so you need to get a little bit more advanced in your trading if you want to catch the breakout on some of these opportunities, but there is certain criteria that certainly needs to be met. I'm going to open up one of the new order flow platforms that I've been using called Deep Charts. Okay, so this is Deep Charts. This is one of the order flow platforms that I've been using recently. It's a new order flow platform, pretty advanced platform as well. The guys that built this did a phenomenal job, and there's a lot of tools you can use in these. There's only a few that I really use myself. So if we just take a look at our charts, we can see this is that same area where value was built outside of the prior value area, followed by continuation. And what I did was I took a breakout trade today, but I got the confirmation in signals from volume. All right. So what this platform does is that some of the tools you can use, it will plot out the delta and the biggest trades that are actually happening in an individual market by the aggressors. The aggressors can be seen as the participants using market orders. Market orders are what move price in the market, and then you need to implement some of the principles of effort versus reward. All right. So for instance, we can see this is that same value area that was being built, that new balance range built outside of the prior value area. All right, what we can see inside of this was already giving us great context clues. All right, if you take a look at the numbers on the candlesticks, that represents some of the larger market orders that came in. If they're green, those were buy orders. If those were red or purple, those were sell orders. So what we can see here is there's a lot of big trades happening within this value area or this balance range, and we can see that sellers just get completely absorbed. There is a ton of aggressive selling within this balance range, and there's no follow through in price. The sellers just get completely absorbed. All right. And then when I took the trade was on the breakout on the initiatory candle, which gave us the breakout. All right. So if we're taking a look at the big trades on the candles, those are good principles to work with as well. But we also want to take a look at the volume, the total volume of various candles, which you can see on the bottom of the screen here. All right. So if I just bring this up a little bit, expand this out a little bit for you guys, maybe something like this. Okay. Then what we can see is on the breakout candle right here, right? On the breakout candle right there. If we take a look at the bottom here, the orange levels are the total volume of that candle. And then down below would be seen as that candle's delta. And delta can just be understood as the market buy orders minus the market sell orders. And so what we can see on this breakout candle is strong initiatory volume. So on your breakout candles, you want to make sure that there is strong volume, right? Relative to prior candles, of course. And what we can see is almost double the amount of volume that is showing a lot of interest in this move as prices are breaking out. Then what we can also see down below is that this candle has an extremely high positive delta, confirming that the aggressive buyers are interested in this move up. All right, an additional confluence in this candle is that we can see that there is a large aggressive seller, 103, that just gets completely absorbed, and then we get an aggressive buyer that is getting rewarded. All right, so once this candle closes, if you have the great volume metrics here, and then you have the good delta, and then you have the additional confluence, which is kind of a extra on top here of a seller getting absorbed, then you could take your entry on the candle close, and realistically, your stop loss could just go right down below where that big seller got absorbed, giving yourself a very, very small amount of risk for a great reward potential. And we can see that the markets just absolutely rip up from there towards the end of the day until we started to sell off a little bit. All right. So in this example, you would have needed to use some sort of volume analytics or order flow in order to capture the opportunity. And if you're going to look to take a breakout trade, you have to make sure that there is high initiatory volume with a high delta going in the correct direction. And you got to make sure that that candle, of course, closes outside of the prior balance range as well. So that would be the signal for for me on a breakout setup right there. All right. So that pretty much wraps up the video here, guys, and hopefully you got a lot out of it. Just make sure to follow those principles, include those in your playbooks, study those, and look for them. They're great setups when they manifest. Very high probability of success, especially if you're trading in the direction of the overall market on the higher time frames. Thank you guys very much. We'll see you next time.